There is three types of trends within the market. So when you're trading, price or the market will move in three types of trends. It will move in an uptrend, a sideways trend, also known as consolidation. So the sideways trend is also known as consolidation. And then the market will also move in a downtrend. So those are the three: uptrend, sideways trend, and downtrend. And when you're trading, you want to avoid trading within the sideways trend. Or our strategy that we're using works best in an uptrend or a downtrend. Now, something I didn't mention before, in the futures market, you can make money when price is going up or when price is going down. You just have to predict where price is going. If it's going up, you can buy and make money. If it's going down, you can sell and make money. So, yeah, so the market moves in an uptrend and in a downtrend and a sideways trend. And when it moves in an uptrend, you always have higher highs and higher lows, higher highs and higher lows. So remember here, um, uptrend for buyers, higher highs, higher lows. Downtrend for sellers, lower highs and lower lows. So as the market is moving in an uptrend, it's like a zigzag pattern that is happening because the market is not just gonna move, price is not just gonna move in a straight line. It's gonna create patterns. And most of the patterns it creates are uptrend zigzag patterns or sideways zigzag patterns or downwards zigzag patterns. So in an uptrend, you always have higher highs and higher lows. So price will come from a higher low, then creates a higher high, then a higher low, then higher high, higher low, higher high. Then this is just low, high, low, high, low, high. Then when it comes to a downtrend, it creates a lower low, a lower high, a lower low, a lower high, a lower low. So those are the patterns that will indicate to you that it's a downtrend or an uptrend. So they can also be called swing highs or swing lows. So it can also be called a swing high, a swing low, swing high, swing low, swing high. Same thing here. You have a swing high, a swing low, swing high, swing low, swing high, swing low. But the most important thing for you to identify is the higher highs, higher lows, and higher highs, higher lows. And then for downtrend is lower low, lower high, lower low, and lower high. Now, when you draw it on the chart, you focus on just naming it with LH. So you focus on, sorry, for uptrend, you focus on HH, HL, HH, HL. The HH meaning higher high, the HL meaning higher low. Downtrend, it would be lower low, which is the LL and the LH. LL, LH. Lower low, lower high. Lower low, lower high. So in your own time, you're gonna practice to find the trends. You practice to find your lower lows and lower highs in a downtrend and then higher highs and higher lows in an uptrend. So you can get a practice on. Now, let me show let me find somewhere in the market just to practice that quickly. And when you do that, try and do it on the 5 minute chart. Don't do it. Since we're gonna be trading on the 5 minute chart, focus on the 5 minute chart to find your trend. I'll use an example here. So the market was down here. They started creating an uptrend. So you use your text tool and click and type. So let's say this is a low, or I'll just call it lower low. Now, price came and went up. So remember, we're looking for zigzag patterns. We know it doesn't have to be perfect. We're looking for zigzag patterns. So that's a lower low. And then price swung up. Remember, swing high, swing low, swing high, swing low. So every time price swings up or swings down, that indicates where your lower low or your lower high is. So in an uptrend, we only have higher highs and higher lows. So let me make sure we hear that correctly. In an uptrend, we only have higher highs and higher lows. In a downtrend, we only have lower highs and lower lows. So this will be a higher high. And then price swung down here. This would be a higher low. Then we went up here, higher high. Then price went down, swung down low. This is a higher low. Now, the reason why this is a higher high is because it's higher than the previous high. The reason why this is a higher low, because it's higher than the previous low. It's higher than the previous low. That's why we call it a higher low. It's higher than the previous high. That's why it's a higher high. Now, in a downtrend, let's just find the downtrend quickly. So this is a quick downtrend right here. We have a lower low here, a lower high, and then lower low because it's lower than the previous low. And then we have a lower high because it's lower than the previous high. So this is lower than the previous high. So it's a lower high. And then we have a lower low. So you look for the lowest part down here. So yes, and then from there, it started creating a sideways trend kind of. But this could be a lower high. So in a downtrend, we only look for lower lows and lower highs. This is lower than this previous high. This is lower than this previous high. This is lower than this previous low. This is lower than this previous low. So we're looking for the zigzag pattern. Let me use one more tool just to show you. We're looking for a zigzag pattern to show us that downtrend. Okay, and then in the uptrend, we're looking for that zigzag pattern going up. That's the uptrend we're focusing on. So yes, so remember that higher highs and higher lows for the uptrend, lower highs and lower lows for a downtrend. And then obviously we have sideways trend, consolidation trend.